Hello, good morning, everyone.
Good morning,
Good
sir.
morning, Olugbenga Babatunde. Good morning, A1.
Good morning, sir.
Must be the name of your phone.
Good morning.
Good morning. I see
Yes, sir.
me.
Yes, good morning.
Morning, sir.
Good morning. You're welcome, sir.
Morning.
Good morning. Good morning. Good morning, everyone. The audio is it very good?
Perfect.
Yeah, it's
All
good.
right, fantastic.
Yes, sir.
All right, thank you very much. Okay. We've already waited 5 minutes, so I guess it's a good time to start. I like to wait a few minutes so that people with connectivity issues can quickly sort it before we get started, so everyone can sure be on the same page. I see Xiaomi 220733 SFG. Thank you very much. All right. So I'm going to mute everyone now so that we can get started right away.
All right.
Okay, so good morning once again. To get started, of course, I welcome everyone to today's session of the morning market review. Today being Tuesday, 11th day of June, 2024. All right, so every morning we bring in different analysts here Monday through Friday from 8 to 9 a.m. And the main focus is for us to check out what's happening in the market, just like the name implies, morning market review, so that we can have one or two instruments to add to our watch list for the rest for today and for the rest of the week as well. Thank you very much, Victor. Peaceful morning to you too. All right. So to get started, let me switch to forexfactory.com so that we can quickly, it's good to start from there. You don't want to set up your technicals and then fundamental comes in to mess it up. So it's a good practice to first of all check out what the economic calendar is saying and what kind of impact that may have on your trades. Okay, so just a second while I navigate to forexfactory.com. Okay, I want to believe we all can see my screen. If you can, in the comment section, please help me put, yeah, I'm already sharing it. Just confirm to me that you can see my screen. Olorunfemi Sunday Akombi and the rest of us in this call. You can simply type FX in the comment section so that I know that you can see my screen. I have forexfactory.com up. All right. Okay, thank you very much. Now we can proceed. Thank you very much, everyone that responded to that. Thank you, everyone. All right, so today, Tuesday, like I said, 11th day of June. Earlier today, we had this claimant count change for the GBP, and put simply, that simply measures the change in the number of people claiming unemployment-related benefits during the previous month. Of course, it's also quite an important metric. But in this case, the usual thing is that we say when actual is greater than forecast, then it's a good buy. It's a good one for that particular currency. But in this case, because it measures, it has to do with unemployment. So for this, it means that actual must be less than forecast for that news to be good for the currency because it is unemployment. So not much of high impact news for the rest of today. But guess what? From tomorrow, Wednesday, it's going to be a series of news releases. We have the CPI coming up. We have the core CPI. We have the federal funds rate. We have the FOMC. So tomorrow we can expect increased volatility, increased movement. And of course, traders love volatility. You like that when you put your investment in a particular asset, it moves almost immediately. It can be very fantastic. But at the same time, you need to be prepared for it so that you can take maximum advantage of the releases. All right. Of course, last week, Friday, we had the NFP report. We have the data as it pertains to job releases from the US. And I remember NFP used to be a very, very important news event of the month. And the reason is simply because at that time, I think back from 2011, 2012, the US economy just came out of recession and traders, of course, were paying attention to the jobs number. So that means that if the numbers are getting better for jobs releases, then you can expect a bullish reaction. And at the same time, if the numbers are poor, then you can expect a bearish reaction as well. And just like we saw on Friday, NFP reports can have a very significant impact on the markets. And again, that is simply as a result of interest rates. Very, very important. As interest rates have a very large impact on the forex markets because it is directly related to a nation's currency value. Talking about interest rates now. And the basic idea is if interest rates go up, then the value of that nation's currency will go up as well. And if interest rate is down, the value of the currency too decreases. And all of this also happens because of inflation. As interest rates are decreased, individuals and corporations will begin to increase their borrowing. You pay back a less amount of money because interest rates are decreased. And this will also increase, it will in a way also result in increased spending because there's plenty money now. People spend more. And that would ultimately is expected to grow the economy. Now, a growing economy is or may seem like a good thing, and of course it should be. However, as an economy is growing, the rate of inflation too is growing. And this is because the more money that is in an economy, the less that money is worth. And this is a universal truth. Scarcity increases value and abundance decreases value. And this is also the reason why gold is a more valuable asset than water, even though one needs one more than the other one. So the basic idea is the more money in an economy, the less that there is a new challenger in town. And of course, that challenger is the CPI. And guess what? Like I said, tomorrow we're going to have the CPI release and a very fantastic one, of course. And again, that's because after years and years of printing money, inflation is now the biggest issue on earth right now, all over the world. So when a news release like the CPI comes out, there's a huge reaction in the markets. I got some funny sound from my laptop now. I would like us to confirm we can still hear me. Please, can you quickly type FX again? I got some funny sound from my laptop right now, like something reloaded. Okay, okay, all right. Thank you very much. So I just give us a very quick background and overview for NFP and as well as the CPI and the other news that we have coming up tomorrow. All right. So for today, we didn't have much of high impact news. So right about now, I would like to head over to MetaTrader 4 so that we can have an overview of what instruments to look out for the rest of today and the rest of the week as well. All right, so I'm going to stop Forex Factory now and then switch to MetaTrader 4. Just a minute while I do that. All right. Now I have MT4 up on the screen. So please, very quickly, I would also like us to confirm so that I'm sure we're on the same page. Could you type MT4 in the comment section so that we can forge ahead? Okay, you type MT4, that means you can see my screen, MetaTrader 4. All right, brilliant. Okay, thank you very much, everyone. Okay, so let's get right to it. Thank you very much, everyone that responded. So at intervals, I'm going to be checking the comment section just to see the comments people have dropped so far in the course of the analysis that we want to get started with right now. All right. So I'd like to start with the USD index again because from the USD index, I can confirm the strength or weakness of the dollar and also relates this to quite a number of other major pairs, including some commodities as well, even the US indices. So once I know this, I can easily relate this idea to quite a number of pairs. All right, so for quite a while, I remember last week Tuesday when I was here, I kept stressing how I was cautiously bullish on the dollar. I was cautiously bullish on the dollar. And reason is because I have this channel hub represented by these two trend lines that you can see on my screen, these trend lines, which is the diagonal equivalent of the horizontal line that we're used to. And for quite some time, we can see that the dollar has been trading within this channel, ascending channel. So, and then I remember talking about the MPE. Okay, I even still have it here. I still have it here. Okay, this was my some of my main touching points the last time I was on this platform, talking about the MPE trading strategy. Very simple. M again is market structure, P price level, E entry. Now, looking at this USD index now, I remember also drawing something like this to show us the highs and lows, to show us the higher lows and higher highs. If you were here last week, we did this. All right. And then because we now have this higher low, we have this higher low, and then we all agreed that the next leg should be that the dollar will now give us a higher high. Will now be that dollar give us a higher high. And then, interestingly, when NFP happened, when the jobs data were released last week, we got this very aggressive bullish candle for the dollar, which was very, very fantastic for me, as it's something I've been looking forward to, so that I can even get aggressively bullish, can get aggressively bullish on the dollar. And now that we got this, and the thing about the other interesting thing about this is also the fact that I would also be treating this level as what is called a fake out. Let me put that here so we can see it as what is called a fake out. A fake out. And what does that mean? It simply means a breakout that failed. A breakout that failed. You see, a breakout that failed. That's a fake out. And we can see here, okay, away from this current level, first of all, let me do this. At this level now, here, represented by this shape here, this rectangle or square shape, we also had towards the end of 2023, we had this fake out as well, which is also a breakout that failed, like I said. Now, because price broke, sorry, hold on. I want you to understand this. This is one of the fantastic ways of trading. Okay, let me zoom it so it's clearer. All right, so at this level now, which is around this 103 price level, which has held several times as a support level. And then eventually, like I said, towards the end of 2023, the price broke down below that level, and which is, of course, a breakout, price breaking below this important level. Okay, let me do this. All right. So because price broke below this important level, which is a breakout of an area of value, ideally, price is supposed to sustain that move to the further to the downside. Okay, my voice, okay. Sorry about that. Okay, I just decided to check this comment section, and then I'm seeing a lot of my voice is cracking, my voice is not clear, it's breaking. Okay. Please, can you confirm that it's better now? Could you please help confirm that it's better now so I can continue? I want us to get this idea. Okay, V says it's fine now. All right, better now. Dammy boy, Goats Wales, Iromi Abiba. All right, thank you very much. Thank you very much. Okay, so I was I see quite a number of people also asking which instrument is this. Probably you joined late. This is the dollar index. And like I said, it's a good place to start from so that you can use this idea for all the other instruments that you trade, especially the major pairs, the US indices, commodities as well. Okay, so I was talking about fake out, which is a breakout that failed. And how do you identify that? If you see, for example, I'm pointing us to this important price level here for the dollar index at around 100.850. Now, this happened in the past. It's just to show us examples of what I mean by a fake out, a breakout that failed. Okay, so you can see how 100.850 has served as support for quite a number of times. Let me do this to further make it clearer. So we have it here. And then again at this level. And eventually price broke below it. And since price broke below that level, we should have seen an aggressive move to the downside, but that did not happen because price closed back above that level. And then we saw this aggressive move to the downside. You see, very aggressive move to the upside. Sorry, we saw that very aggressive move to the upside. Okay, now fast forward to this level here now. You see this level at 101.9. This level again also gave us a fantastic fake out, which is also a breakout that failed. And after that happened too, we also got this aggressive move to the upside. That's number two. Number three, we also got this recently at 103. I hope you're following and you're understanding this. We also got this at 103. Also a fake out, a breakout that failed. Price came down below this important area of value and then couldn't sustain a move to the downside. And again, we got an aggressive move to the upside. You see the build up now. Now, currently, what do we have? We also got this here, which is also beginning to look like a fake out, a breakout that also failed. Why do I know that? If you look at my trend lines now, this lower one, price has respected that trend line as support. And eventually we got a break below that trend line at this level. I want to take this out so that it's clearer. Okay, so we got a break below that trend line. You see it, and then price is now back above that level. So what it implies is that we may also have the fake out idea at this level. So what is expected now, you can see that after each of fake outs that I pointed out in the past, what we got was an aggressive rally to the upside. We got an aggressive rally to the upside. Okay, I'm checking the comment section now, and Dami Boy is saying my voice is breaking. Please, can I have more confirmations? Is it still breaking or is it very good now? Yes, it is good, or yes, it is breaking. Okay, voice is fine. All right, thank you very much. Okay, so now that we also have a fake out, what it means is that, okay, let me ask you this. What is expected now? What is expected now? I've shown us series of fake outs and what happened in the past. And right now that we're also confirming a fake out as well, what do you think is expected after that fake out? Aggressive movement to the upside. Aggressive movements to the upside. You say it, fantastic. So what it means is that from this moment on, we're going to see an aggressive move to the upside. Every time a fake out happened in the past, like I pointed out, we saw an aggressive move to the upside. So the same is expected for this current level, which is also in line with our structure, higher lows and higher highs. Okay, having said that, I now switch to Euro USD. And I'll switch to Euro USD as the first instrument I want to talk about. And again, this is Euro USD daily time frame now. All right, fantastic. Thank you very much, everyone that responded. Now, this is Euro USD again on a daily time frame. This is Euro USD on a daily time frame. And then you can also see the fake outs that I talked about. But in this instance, it is the bearish version of what I showed us on the USD index. Of course, it is expected because they move in opposite direction. If the dollar is bullish, we expect Euro USD to be bearish. So firstly, it happened here. We got that fake out at this level. You see it, we got that fake out, and then an aggressive move to the downside. You see that? You see that? An aggressive move to the downside. Now, see this. This is what we now have currently. Let me take out this shape so it doesn't confuse us. Okay, so here now we can see how well price has respected this trend line. You see it, first it was here as resistance, here we got a fake out and then an aggressive move to the downside. Here it acted as resistance, and now we also have a fake out. You see, which means that price closed above the trend line and then is back below it. So what is expected here again is also an aggressive move to the downside. And my expectation for this is that price should come back to this 1.0660 mark, somewhere around here. Price should come back to this level. And then thanks to the NFP data that we got, it's beginning to look very much like it. So what it means is that my Euro USD, I'll be looking to take sell opportunities. I'll be looking to take sell opportunities. Fantastic sell opportunity. And if you're already in a sell trade for Euro USD, it's very, very fantastic. Very, very fantastic. And if you are not in a sell trade yet for Euro USD, what you can do to take advantage of this move is number one, wait for price to do this, come back here to this 1.08 level. Of course, that can be in form of a limit order. Wait for price to come back to 1.08 level, or you take an instant buy at this level. You take an instant buy at this level because we expect, because of the aggressive move that we saw on Friday, we can expect some retracement. We can expect some mild retracement, and then maybe back at this 1.08 level. And then from that point, we see a fall to the downside. See a fall to the downside. This is the daily time frame. Victor is asking, this is the daily time frame. Now, if I switch to H4, I still have the same expectation. You can see we're already seeing some bullish movements here. We're already seeing some bullish movements. Even if I go to 1 hour, you see we're already seeing some bullish movement. So the expectation here is that price retests this level, which is also an opportunity to close that gap. And then we see price continue in the bearish direction as expected. As expected. Okay, Dummy Boy is saying that I repeat myself. I'll try to do that very quickly. So we started on the daily time frame here. We started on the daily time frame. And what did we do on the daily time frame? We established that we have a fake out here. It is a breakout that failed because ideally, when price broke above that trend line, it should have continued in the upward direction, but that did not happen. And then we saw this close back below that trend line. So this confirms our fake out, just like I showed us on the USD index. This is confirming our fake out. And then after a fake out, you will see an aggressive move in the opposite direction. So what is expected here now is an aggressive move to the downside. And then my expectation is for price to come back to this 1.066 level. It's for price to come back to this 1.066 level. So I said, if you already have a sell order on this Euro USD, it is fantastic. But if you don't, and you still want to take advantage of this analysis, 2 ways to do that. Number one, and then I switched to the H1 time frame, and then I said that we can wait for price to come back to somewhere around this level, at least see some retracement of that aggressive move that we saw as a result of NFP. So we expect price to give us some retracement back to somewhere around this price level. So I said you can if you're an aggressive trader, you can either take a buy at this level and then exit around this area. Just take a few pips. But if you are a more conservative trader like myself, then you may want to allow price to complete the retracement, and then you sell at the end of that retracement. So one can use a sell limit order at this point to take advantage of that trade. So that's it for Euro USD. That's it for Euro USD. So moving on to Pounds USD now. Moving on to Pounds USD. And this is what we have. This is what we have. So starting from the daily time frame now. This is the daily time frame. And then on the daily time frame, above this 1.28 level, here, you see my shape here. I also got a fantastic fake out, even for Pounds USD. You see this? Now, this 1.28 level has acted as resistance. You see it at this level, back here, back at this level, even up to here, this. So we got several points. We got several touch points. And then eventually price closed above it. And because that is considered to be a breakout, then we expect price to continue to the upside. But that did not happen. Almost immediately, price went back below the 1.28 level. And then because that is a fake out, like I said, we can expect an aggressive move in the opposite direction. And that was what gave rise to today's very bearish movement, aggressive move to the downside. And now, currently, price is also back at that 1.28 level. Very, very fantastic. Back at that 1.28 level. And then if I also switch to the H4 time frame, you also see exactly what I'm talking about. All right. You see this trend lines here, which is a channel. You see this here. Several times, price has tested this lower lower trend line as support. We got 1 point here, we got another one here, we got another one here, almost at this level too, another one here. Price eventually broke below that level. And then we're seeing retracement here. Now, this moving average is 50 MA. And then we can see that price is almost back at that 50 MA. So let me see H1. Okay. When price returns to that 50 MA, we're beginning to see that aggressive move to the downside. So again, on Pounds USD, I'm looking out for sell opportunity. Okay. Trying to go through the comment section to see what we have. And I see that we are fantastic. We're fantastic. I see that we are fantastic. All right. So that's the idea that I also have for Pounds USD. And that's exactly what I'll be looking out for to take this trade. Number one, at this current level, I can take a sell. I can take a sell at this current level. Or if I'm a more conservative trader, I may want to allow price break below this level first of all, and then I take my sell from there, because this here is a support. And then because of this support, we saw price pushed a little bit to the upside, and this 50 MA, the 50 moving average, is now acting as resistance. So at the end, because this is the 4 hours time frame now, at the end of these 4 hours, if we do have a bearish candle, then I can take a sell order at this current level. I can take a sell order at this current level. That's for the Pounds USD. That's for the Pounds USD. Okay, so I see someone talking about oil, and then I have oil right here. Now, this is oil. Very, very fantastic. Again, if we are to use market structure, market structure right now, we can see that throughout this period, we got series of higher lows and higher highs. For oil now, we got series of higher lows and higher highs. Let me pick it again. You see it? We got that mild retracement. It pushed to the upside, another mild retracement, and then a push to the upside. Now, ideally, this structure is supposed to continue. So if this were to remain bullish, then we'll continue to see series of higher lows and higher highs, just like we have been seeing. But eventually, we saw price broke below this last swing low that we had. And if you're using a price action, market structure, and things like that to trade, then this is a very quick confirmation that the direction is about to change. And interestingly, we got some sort of consolidation at this point. Now, when we see moves like this, initially you have a bearish move. We got a consolidation phase. Like up to 80% of the time, price will continue in the direction of the underlying trend. And in this case, the underlying trend is bearish because we saw this, and then we saw this consolidation, and then we saw this other aggressive move to the downside. And then what happened? And then we got this pullback. So what it means now is that I expect the bearish move to continue. Expect the bearish move to continue from this price level. Expect the bearish move to continue. So what that means is that I'm looking for opportunities to sell. Looking for opportunities to sell. And then let's see. The 4 hours time frame already give us this engulfing candle. Give us this engulfing candle. Very, very fantastic. Further confirming the bias that we have. You see this again? Further confirming the bias that we have here. So it's a for those of us requesting for the oil analysis, this is what we have. I'm bearish on oil. I'm bearish on oil. Which will further be confirmed at the end of today. If we do get a bearish candle, then it will further confirm that bearish move for the oil. It will further confirm it. And then we can expect price to come back to this price level at around 77 price mark. You are on negative buy on pound USD. Yes, I really guess or think you would be on a negative because from the analysis, from what we just analyzed, we expect pound USD to be bearish. We expect pound USD to be bearish. We expect pound USD to be bearish. Now, I would advise you leave if at the end of this current 4 hours candle that we have here, this red candle on 4 hours, if it closes bearish at the end of these 4 hours, then the bearish move would be further confirmed. So I would advise that if you're looking to exit that trade, at the end of this current 4 hours, if you do have a bearish candle here, this is pound USD, I'm going back to it because of the person that requested for it. So that so at the end of these 4 hours, if we do have a bearish candle here, then we can further expect a move to the downside. So we already touched on oil, and then I would also like to go to Euro pounds now. Go to Euro pounds. Euro pounds is an asset that I've been talking about for weeks. I've been talking about Euro pounds, and if you have been here for these sessions, you would also confirm that. And reason is because this price level here at 0.85 is very, very significant for the price of euro pounds. So what do we have? Here we got a double bottom, and then we got that aggressive rally to the upside, you see. And then again, we also got this double bottom pattern, which is also a reversal pattern. And what happened? Price also pushed to the upside. Now, when price returned to the same 0.85 level, I was confident that price would also go up from there. That price would also go up from that level, just like we have seen in the past. But guess what? That is not happening right now. Now, the way I am going to be approaching this is to now check whether this can give us a fake out. Remember, I've mentioned fake out in the previous analysis that I've done. I've mentioned fake out, and that is a breakout that failed. So right now, that price has now broken below 0.85 level. Ideally, it is supposed to continue that bearish move to the downside. However, if in the coming days, we can get a close back above 0.85, then the whole of this level would be a fake out. The whole of this level, this move here, would be a fake out. And then, like I have said, and like you already know, after a fake out is confirmed, what we are going to get is an aggressive move to the upside. But the way to approach this is, number one, we need price to go back above 0.85 so that we can confirm that this is a fake out, which is a failed breakout, a breakout that failed. However, if in the coming days, with price fails to go above 0.85, so if we get a retest of 0.85 as resistance, and then price begins to do this, then the bearish move may be extended. But again, if, however, I get a close back above 0.85, then it's going to be a fantastic trade opportunity for the euro pounds. And I'm very much interested in this trade because I've mentioned it for quite some time now, and it's a trade that I really want to take advantage of. Let me check the comments we have. Okay. Okay, this AUD card is also one that I want to talk about. It's also one that I want to talk about, which may also give us a fantastic trade opportunity in terms of using fake out to trade. Okay, now this 0.9057 level is an important price level. How do I know that? We can see several times when that price level has acted as either support or resistance for price. Here we got, okay, let me deactivate that. Here we got a close above that level. Okay, if we start from here, at this level, it acted as support. Price pushed up a little bit, came back below that level, here as resistance, back here as resistance, even back here as resistance. And all of these were breakouts that failed. 1, 2, 3 points were breakouts that failed. At this point as resistance, at this point as resistance. Now, fast forward to what we currently have. You see this point. We also got a breakout above 0.9057 here. Also got that breakout. Now, again, this breakout, because we now have a breakout, ideally, it is supposed to continue to the upside. But what we now have is what looks like a double top. You see, is what looks like a double top. We have top one here, and then we have the second one right here. So for AUD card, what I'm going to be looking out for is to treat this current level as a fake out. As long as we don't see a close back above this level, then the whole of this place would have been a fake out. And then again, after a fake out, what we will see is an aggressive move to the downside. which is going to be a very fantastic trade opportunity when it eventually plays out. It's going to be a fantastic trade opportunity. Now, for those of us who are a little bit aggressive, what you can do here is to take a sell at this current level, and then your stop loss will be above this double top area that we have here, so that you can ride this trend early. However, if you are a more conservative trader like myself, then what I will be looking out for will be a break below that level. We may get a retest, and then it continues to the downside, which is going to be very, very fantastic. This is an instrument you should add to your watch list, because by the time this plays out, the potential here is really huge. Because after like I've showed us for the number of instruments that I've talked about earlier, especially the fake out, then you would notice that after every fake out, what we got was an aggressive rally in the opposite direction, was an aggressive move in the opposite direction. And then we can also expect the same to happen for AUD CAD. All right. So the next one that I want to talk about, USD JPY. Now, it doesn't matter whether it is H1 for you, or it is 30 minutes, or it is H4, or it is H1. Once you understand this idea we're talking about, you can apply this to any time frame. You can apply it to any time frame. Doesn't matter at all. For example, if we go back to AUD CAD, and then I go to H1, it's still the same idea. Still the same idea. For example, this is my this is the 0.9057 level I was talking about. And then on my 1 hour time frame, I'm already getting, and then this is the double top that I mentioned on the daily time frame, which has given us a triple top even here. And then we saw this aggressive move to the downside. We got this retracement, and then price is already looking bearish. So it's a fantastic time to enter a sell for this trade if you are using the 1 hour time frame to trade. So it really doesn't matter the time frame you're on. The idea is what is important, so that you can then apply it to any time frame at all. Once you understand the idea, then you would have no issues deciding on what time frame you want to trade. Of course, if you are also a scalper, you can go as low as 5 minutes, but don't forget, still the same idea. All right, so USD JPY now. USD JPY. Someone is asking whether this is a fake out or a breakout. All right, so currently, you would agree with me that dollar is now bullish. That dollar is now bullish. So what happens? This, if you look at this 155 level that I have here, it acted as support. Now, first of all, let me zoom in a little bit so that we can see it. I have this trend line that I'm also watching for USD JPY, and you can see how price has tested it multiple times as support. Now, we got this close above the 155 level. Let me do this so it's more obvious. We got this close above the 155 level, which should have been a fake out. You see, price broke above that level, but came back below that level. But now it is unable to go below this trend line that is now acting as support. And then we can see that price is now beginning to give us higher lows and highs. You see, price is now giving us higher lows and highs. Gave us a new high. Price is now back at the same level, and then we're beginning to see a push to the upside. So for USD JPY now, as long as price remains above this 155 level, then I'm going to be bullish. You see, Now this is 4 hours. The same idea, like I said, price came above 155 level. We got a retest here, and now we're seeing that bullish move. So now, if I'm going to trade this, what I need, because it is now close to this resistance that we had here, and you don't want to be buying into a resistance. You don't want to be buying into a resistance. So this is 4 hours now, even 1 hour, you see. So the way I'm going to trade this, or the idea is, number one, wait for price to break above this level, give us a retracement to test it at support, and then price pushes higher from there. Or if we get a retracement back to this support or this level, then I'll take my buy from that point. But price, as it is currently, is now close to a resistance. And like I said, you don't want to be buying into a resistance, except you're an aggressive trader. You don't want to be buying into a resistance. You'd rather wait for price to go above the resistance, you test it as support, and then you get a fantastic entry point at that level, which will also give you a fantastic risk-reward ratio. Ademolu Abimbola says no audio here. I doubt that very much. You may want to restart your device so that you can get connected. Flora is saying that she has a negative on gold. Okay, let's quickly check the idea we have there. All right, thank you very much for the confirmation, Ademolu. Thank you, Modesta. All right. Okay. For gold here, for me, because the dollar is now bullish, then I can also expect gold to be bearish. I don't know what you have. I don't know what you currently have on gold. That's Flora. I don't know if you're buying or selling, but the idea that I have for gold is that I want to treat the whole of this part. I want to treat the whole of this part as a fake out. I want to treat the whole of this part as a fake out. And what that would mean is that, and then if you also look closely, you'll see that we have here also we have a reversal chart pattern, which is head and shoulder. We also have head and shoulder right here. Of course, this would be the head. Let me do this so that it's obvious. This will be the head right here. And then this will be the left shoulder. This area here. And then this area right here will be the right shoulder. You see, so we have the head here, we have the left shoulder here, we have the right shoulder here. And of course, if you have head and shoulder pattern like this, it is a bearish reversal pattern. It's a bearish reversal pattern. So you're buying gold right now. Okay. But if we get a close below this neckline at this area, if we get a close below this neckline now, then I can expect this to be even more bearish. First at 2265 price level, and then back at 2200 level. So because we have head and shoulder pattern here, which is also a bearish reversal pattern, once we get a break of this neckline, then we can expect price to push further to the downside. Or we get a retracement back at this resistance at around 23.25 because it has acted as support in the past. You see several touches at this level. So we may get a retracement back to 23.25 and then price begins to fall from there. So we may get that pattern. That's for gold. All right. Also, I've seen quite a number of pounds JPY. So let me see what we have on pounds JPY. All right. On pounds JPY now, this which has been you would agree with me, very, very bullish. You see, very, very bullish. In fact, you don't need to look at it 2 times to know that this is has been very, very aggressive, an aggressive bullish move to the upside. And then this 200 markdown is now acting as resistance. You see, now acting as resistance. So the way I'm going to trade this, because it is already very high, you see, this is weekly time frame now, very, very high. Even monthly time frame, very, very high. Okay, this is daily now, and this is 4 hours. Okay, so this 200 mark now, if I get, and then you can see that we see some form of structure here. We see a series of higher lows and higher highs, and price is now above the 200 mark. So it is expected that we get a bullish move from here. If that does not happen, then the whole of that part would have been a fake out. The whole of this part would have been a fake out. You see it? We got it here again. Price has been unable to sustain that breakout. Every time it broke, it will fall back below that level. You see it? We got this first point here. We got this second one here. And now we see this. So if I get, this is 4 hours now. This is 1 hour. So the way I'm going to trade this is to wait for a close back below 200. So wait for a close back below 200. However, this 200 level 2 may be acting as support for the next bullish movement. And as you can see on this 1 hour time frame, we already have this green candle. This is looking more like a piercing line pattern. So because we have that, we may also see a move to the upside. But we also have a resistance here. The risk reward ratio here is quite small. It's quite small. The risk reward ratio here is quite small, except you're an aggressive trader. That's when you would take a buy here and then maybe put your stop loss somewhere close to this resistance. Somewhere close to this resistance. But for me, I would rather wait for here to confirm a fake out and then take advantage of what should be an aggressive move to the downside. What should be an aggressive move to the downside. That's my approach for the pounds JPY. And having said that, I think this is the best point to draw the curtain. Oluwatosin Oleshe, how does fresh pay work? Okay, that is quite simple, but you may have to get in touch with your account manager. We're already way past our schedule. But what I'm going to do is to drop my number now, and then at the end of this session, especially Oluwatosin Oleshe, you can reach out to me, and then I would either ask you to join one of the branches closest to you, or ask your account manager to guide you on how you are going to install and use the FreshPip software to trade. Okay. Now I want to appreciate everyone for joining the session again. Tomorrow is another day, and one of our analysts will also be joining us here tomorrow. And don't forget, we have series of high impact news coming out tomorrow. We have the CPI, we have the federal funds rate, we have the FOMC, so we can expect very, very high volatility. And I will also expect us to also take advantage of that for more pips, All right. Okay, I said I was going to drop my number. 70515905327. Okay. All right, that's it. Thank you very much, everyone, once again. Yeah, AY, I just dropped that. I just dropped that in the comment section, and I hope you see it. Thank you very much, Pastor. Awesome. Thank you very much, AY. It's a good time to draw the curtain, and I wish us a happy trading day and for the rest of the week. Thank you very much once again. See you next time.